There are more good ideas and business plans out there than there is money available to implement them. A company has to make sure that whatever it pitches to an investor is distinctive, and an IP portfolio is absolutely essential to doing this.
In deep tech and in the science-intensive area of businesses, companies that do not have a strong IP strategy, and typically that involves having a strong patent portfolio, are simply not investable. So in brief, EMV Capital is focused on investing in areas such as energy, industrial high-tech, intelligent infrastructure and healthcare. And almost universally, the businesses that we look at in that space involve a substantial amount of IP.
Before investing, an investor will usually want to verify the robustness of the protection through a process which we call due diligence. And an IP due diligence investigation is a key part of that. Now, an IP due diligence investigation seeks to answer 6 important questions. The first of these is the technology new, not something that's simple variation of what is already on the market. Patents are a good indication of this in that they establish the credentials of the technology in an independent and objective process of examination by a patent office. The second point that you probably need to consider is the IP owned by the company? As you can imagine, investors naturally see themselves as owning a share of the assets. The next point to consider is, does the IP cover the technology on offer? For example, are there any gaps in the technology which would enable a competitor to come in and compete? Next, does the IP support the business model the company intends to use? Is it consistent with the way revenue is going to be delivered? One key consideration, of course, is there any competitor IP? If competitor IP is out there, then it may cause the company to have to license in technology, which would obviously affect the degree to which they can support their revenues. Finally, can the company demonstrate an innovation pipeline? This is not necessarily critical to the success of the IP due diligence, but it does show that the company has a rational plan for converting its ideas into new technologies and new IP.
A lot of the propositions we do get are early stage and often pre-revenue propositions. At that point, one of the very few things that a company does have, besides a business plan, is a patent portfolio. It is one of the very few things that are objective and we can measure.
Seeing IP, particularly as something that's just about protection, is quite a common occurrence. But quite definitely, IP is more than that. It is absolutely critical to establishing the basis for the value proposition.